Assalamualaikum and good afternoon everyone. Today I will talk about my topic, what is money and what is function of money. So, what is really means money in terms of macroeconomics? Money is a commodity that is accepted by the general public as a medium of exchange in business transaction. For example, banknotes are generally accepted as a medium of exchange in business transaction. So, what is the function of money? We have three types of function of money. The first one is we have medium of exchange. The second one we have store of value, and the third one is we have unit of value. The first one is medium of exchange. Medium of exchange is the intermediary tool of exchange overcomes the weakness of the simultaneous demand problem in the barter system. To perform the function, money must be transferable, ideally with low transaction cost, and also must represent something of value. With this function, transaction can be carried out using money without the need for simultaneous wheel. Second one is store of value. According to the store of value line of Tao, the conservation of purchasing power is the most relevant function. The function of money as a store of value overcomes the problem of storing wealth in the barter system. The stable, non-perishable, and easily stored nature of money allows money to function as a store of value. Surplus income and wealth can be stored in the form of money for future use and does not require large space and high financing costs. Lastly, unit of value. The function of money as a measure of value overcomes the problem of measuring value in the barter system. The use of money creates a standard system where the value of all goods can be expressed in terms of ringgit and cent. Comparison of the value of one good with another can be done in the same unit of measurement. So, that is meaning of money in terms of macroeconomics and what is the function of money. That's all.
Greetings, I will explain how the money supply works. A country's money supplies include physical cash and digital money in bank accounts. According to MenQ 2021, it includes currency and deposits held by the public. The central banks control the overall amount of money in the economy. It adjusts the interest rates, banking rule, and the flow of money. Bank Negara Malaysia states this responsibility on their official website. Commercial banks also influence the money supply. When people deposit money, banks keep a small portion and lend the rest. This lending increases digital money in the economy. Mishkin called this the money multiplier. Controlling money supply is important. If the money supply grows too fast, price rise and the inflation happens. If it grows too slowly, the economy weakens. MenQ discussed this relationship. In summary, the central banks manage the system. Banks expend money through lending. Both help keep the economy stable.
So, what is the entity which control the money supply in a country? Mostly, it is the central bank that leads in this, which is the Bank Negara Malaysia. They guess at the correct amount of money to be circulating by executing the playbook of monetary policy. For example, manipulating interest rate, open market operation, and reserve requirement. When they move those levels, the supply of money either increase or decrease. But it's not a one-man show. The government is also not left behind in the act, but indirectly. Increased spending by the government, any alteration with tax policy, or an accumulation or additional debt has spillover effect on the amount of the money in actual circulation. And commercial banks are not to be overlooked either. They are an enormous slice of the cake. The system of the fractional, it is reserve bank, is such that when a bank lends money to a person, the bank is able to make a new money. Any loan, whether it's more or less injecting money into the economy. In a nutshell, therefore, the money supply is largely driven by the central bank, but the government and commercial bank have significant roles to do with the supply of money.
Hi, my name is Arini Murugan with the matrix number 313573, and my subtopic will be how does money supply affect the interest rate, inflation, and also the economics. Money supply. So, for my introduction, money supply refers to the total amount of monetary assets available in an economy at a specific time, which includes cash, coin, and balances held in checking and saving accounts. It plays a crucial role in influencing economic activity, affecting inflation rates, interest rates, and overall financial stability. So, let's go to our another slide. The next will be the relationship between money supply and economic growth. So, the relationship between money supply and economic growth is founded in both classical and contemporary economic theories, which offer varied perspective on how monetary issues produce production and growth. Typically, the classical and monetary schools of thought have maintained that money supply is key determinant of economic activity. Quantity theory of money, proposed by Arvin Fisher, indicates that money supply is correlated to the level of economic activity, upholding that increases in money supply will result in corresponding rise in real productivity. It will be about money supply and also.
When COVID-19 hit Malaysia, it was a disaster. Malaysia was in a predicament. Businesses were slowing down, spending has fallen, and there was an uneasiness in everyone's mind. But behind all of this, there was something else that was flowing. That is, the Malaysia's money supply. According to Bank Negara Malaysia, there was a significant jump in money supply, especially M2 and M3 in the year 2020 and 2021. With the overnight policy rate cut to a historic 1.75%, Malaysia was saved more than ever. Credit had become cheaper, government support was pumped into the economy. As households and firms held onto cash, deposits were rising sharply. However, this rapid expansion began to slow down as the country reopened by 2022. The International Monetary Fund stated that Malaysia was starting to normalize interest rates to manage rising inflation and stabilize the financial condition. As a result, the growth of money supply began decreasing. Even so, Bank Negara reported that in parts of the recovery, deposit growth was still outpacing lending. This shows the confidence being rebuilt gradually. Today, Malaysia's post-pandemic money supply tells a tale of its resilience during crisis, followed by careful adjustment while the economy healed, a reminder that behind every number lies a nation's recovery.
Why is money supply is important? Let's dig into the reason together. First is price stability. Money supply will help to maintain the price stability to maintain the inflation. Imagine where there's too much money, so the price of goods will increase when demand exceeds the supply. So it will affect the inflation. So this will cause to deflation. Second is make sure the economy will run smoothly. The third one is avoiding financial crisis. Fourth, maintaining a stable national currency value. And lastly, helping government to achieve the economic goals. Thank you, that's all from us. I hope you guys understand money supply better when you watch